When it comes to the dividend growth hierarchy, you have a few different levels. You have dividend contenders, dividend challengers, dividend aristocrats, and dividend kings. Dividend contenders are stocks that have increased their dividend for 5 consecutive years, but no more than 10 consecutive years. Dividend challengers have increased their dividend for at least 10 consecutive years, but no more than 25 consecutive years. Dividend aristocrats have increased their dividend for 25 consecutive years, and they are included in the S&P 500, and dividend kings have increased their dividend for 50 consecutive years or more. These are some of the most consistent dividend growers on the market today. And in today's video, we're going to take a look at 3 cheap dividend aristocrats for you to add to your portfolio potentially. So if you're excited for today's video, do me a huge favor. Click that like button down below, as that is huge for the growth of this channel, and I truly appreciate it. And also consider subscribing so you are notified anytime we drop new content. With that being said, let's jump into the video. Hey everyone, Mark Rusin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin the video, let me take a quick moment to thank today's video sponsor, which is Aura. This day and age, it seems like we hear every month about another data breach, where millions have their personal information exposed. Data brokers are making a fortune selling your info to scammers looking to learn more about you. That is why I'm excited to tell you about today's sponsor, Aura. Aura can identify data brokers exposing your info and submit opt-out requests on your behalf. Brokers are legally required to remove your info if you ask them, but they make it super hard to do. Let Aura handle it for you. Aura can also protect you from numerous online threats, provide VPN and password management, and you can try it all for free for 2 weeks by using my link down in the description below. Go to aura.com/Mark to get this promotional offer today. Now back to the video, looking at 3 dividend aristocrats that look pretty cheap. Dividend aristocrat number 1 is Archer Daniels Midland, stock ticker ADM. Archer Daniels Midland procures and processes and sells agriculture products and ingredients. They currently have a market cap of $42 billion, and over the past 12 months, the stock is up 5%. However, year to date, they've fallen under more pressure as they are down 12%. The ag business breaks out into 3 reporting segments: ag services and oilseeds, which accounts for 77% of the company's revenue; carbohydrate solutions, which accounts for nearly 15% of revenues; and nutrition, which accounts for the remaining 8% of company revenues. The past 3 years, revenues for the company have been steadily climbing, reaching $101.5 billion, but analysts are looking for flat growth each of the next few years. Part of the reason for the strong top-line revenue growth the past few years has been due to the skyrocketing commodity prices, due to high inflation, which also resulted in record EPS for the company. Now that commodity pricing has plateaued, investors have jumped ship, but the demand for food will remain. ADM pays a dividend of $1.80 per share, which equates to a dividend yield of 2.4%. Over the past 5 years, the company has increased the dividend at an average annual rate of 6.1%. But we have seen faster dividend growth each of the past few years based on those record revenues and profits. ADM has increased their dividend for 48 consecutive years, having them on the verge of becoming a dividend king. Analysts are looking for EPS of $6.95 per share in 2023, which equates to an earnings multiple of 11.2 times. Over the past 5 years, for comparable purposes, shares of ADM have traded at an average multiple of 13 times, and over the past decade, closer to 15.5 times. So right now, they're trading well below both of those time periods. Analysts are in the buy camp as well, rating the stock a strong buy, with a 12-month price target of $95, implying 21% upside from current levels. Dividend aristocrat number 2 is Abbott Laboratories, stock ticker ABT. Abbott Laboratories manufactures and sells healthcare equipment and products throughout that healthcare sector. The company currently has a market cap of $185 billion. Over the past 12 months, the stock is down 3%, and year to date, it is down 2%. So really not moving one way or the other right now. Abbott Labs is likely less known than the actual company they spun off back in 2013. That company was AbbVie, which now has a market cap that's nearly double that of Abbott Labs. Similar to what we've seen from other healthcare companies, that were benefited greatly during the pandemic, these companies are starting to see those pandemic revenues start to dry up. Think of the likes of Pfizer, which had vaccines. Abbott Labs was at the forefront of the testing that went on during the pandemic. However, the company is primed for further growth within medical devices. As that sector begins to heat up, Abbott Labs is the leader in continuous glucose monitoring thanks to its Freestyle Libre franchise. You can see by looking at both revenues and EPS how the pandemic really benefited a company like Abbott. But much of those one-off benefits are expected now to wear off. Over the past decade, Abbott Labs has been able to grow their free cash flow from $2.2 billion back in 2013 to $7.8 billion as of the end of 2022, peaking out at $8.6 billion in 2021 from pandemic-related items. Those strong free cash flows have helped Abbott pay a growing dividend for 51 consecutive years, not only making them a dividend aristocrat, but also a dividend king. Shares of Abbott currently yield a dividend of nearly 2%, and they have a 5-year dividend growth rate of 12.7%. So you get some nice dividend growth as well. Analysts expect a drop in EPS this year due to those pandemic-related items wearing off, and they expect EPS of $4.40 per share in 2023 before returning to growth in 2024 and double-digit EPS growth in 2025. So investing in ABT is less of a short-term trade and more focused on what's ahead. As such, using next year's EPS estimates, shares of Abbott trade at a forward earnings multiple of 23.2 times and just 20 times using their 2025 estimates. For comparable purposes, the stock has traded at a multiple of 26.3 times over the past 5 years and 23 times the past decade. Analysts rate the stock a moderate buy with a 12-month price target of $123, implying 15% upside from current levels over that time period. Dividend Aristocrat number 3 is Federal Realty Investment Trust, stock ticker FRT. For those of you unfamiliar, FRT is a real estate investment trust that has a diversified portfolio. And if you're looking for value, REITs are a great place to look right now. FRT currently has a market cap of $8 billion, making it the smallest on our list today. Over the past 12 months, the stock is down 1.5%, and year to date, they are down 6%. So the company has certainly weathered the storm in what has been higher interest rates. But looking at VNQ, which is the Vanguard Real Estate ETF, it is down roughly 10% over the same 12-month period. So FRT has outperformed the sector and still trades at a great value. Federal Realty is a REIT I covered in our top picks for July video as well. They are a diversified REIT with 102 properties, which include roughly 3,200 tenants, 26 million square feet, and roughly 3,100 residential units. The REIT focuses on high-quality locations with high barriers to entry, dense populations, and higher household income. The largest percentage of operating income comes from mixed-use properties, accounting for 37%, followed by super regional properties with 27%. As you can see, roughly 75% of the company's centers have some sort of grocery component. The company also has a very diversified tenant base with no single tenant having exposure greater than 2.8% of annual base rent and only 8 tenants having greater than 1% exposure of ABR. Federal Realty, like Abbott Labs, is both a dividend aristocrat and a dividend king, as they have increased their dividend for 55 consecutive years, the longest active streak by a REIT. FRT currently yields a solid dividend of 4.5%, but with that high yield comes very little dividend growth. When it comes to valuation, this is where things get really intriguing. Analysts are expecting 2023 AFFO of $4.92 per share this year, which equates to an AFFO multiple of 19.5 times. For comparable purposes, over the past 5 years, shares of FRT have traded at an AFFO multiple of 24.4 times, and over the past decade, closer to 28 times. Analysts also rank the Dividend Aristocrat a moderate buy, with a 12-month price target of nearly $106, implying 10% upside from current levels, to go along with that high dividend yield. So there we looked at 3 unique dividend aristocrats, with a couple of them actually being dividend kings as well. We looked at an agriculture company, a food business. We looked at a healthcare products and medical device company. And then lastly, we looked at a real estate investment trust. Down in the comments section below, let me know which of these 3 stocks looks the most intriguing to you right now in terms of valuation. And if you own any of those, let me know down in the comments as well. And if you haven't done so, make sure you smash that like button down below, subscribe to the channel, and we'll see you in the next video. Take care.